Hello and welcome to the first episode of Africa Business Weekly for the month of August, as we bring you highlights of conversations that shapes the business landscape across sub-Saharan Africa this week. I'm Akin Obakeye. From West Africa, we stay with fluid developments in Niger as ECOWAS defense chiefs talk tough. From our East Africa desk, we take a look at how the region is leveraging technology to transform food processing, storage, and packaging. It's now time to bring you the details of all of this and more as we begin with our first crossing to Palesa for regional updates from South Africa. Hello, Palesa.
This is your quick wrap of news from Southern Africa for this week, and first on the agenda is Singapore. The Southeast Asian nation recently engaged with the South African government to discuss key opportunities for collaboration and trade in food and electricity. My colleague Zanella Morrison spoke to Rahul Ghosh, who is the Director of Enterprise for Singapore in the Middle East and Africa. Let's listen in for more.
Well, I think these three areas, four areas, I think this is the beginning of the other collaboration. I think with cattle, with soybean, copper, and electricity, that's, I think, the beginning of the big collaboration between South Africa and Indonesia. So being the developing countries, South Africa and Indonesia, I think could make a joint venture. How do we make a downstreaming? How do we get the benefit of our raw material for the interest of the people of Indonesia and also the people of South Africa? That's what happened in Indonesia today. With our experience on nickel ore, because we are the largest nickel ore producer or reserve in the world, I think our economy much better than before. If you look at the data, we grew last year 5% and this year maybe going to be 5.3%. And our inflation, I think 4% last year, and this year I believe we can go down maybe below 4%. So that's, I think, making Indonesia different because of the downstreaming industry. If this could happen in Indonesia, I think we can also do something in South Africa. So developed countries should understand this one also, because like Indonesia also colonized by European countries like 350 years, which is, I think, bad for us. So it's about time also for us to recover, to see the equality, to see also the prosperity. Don't blame Indonesia or developing countries that why we ban some raw material while we need it for the interest of the people of Indonesia or people of South Africa. So if you look at now the result of the downstreaming industry after 8 years, our economy much better than decades of here in Indonesia.
I'm also interested in appreciating the generosity of helping other countries to come with on the journey to recovery. It seems that at the core of your focus is also around the SDG goals, maybe speaking to the electric vehicles, electric cars, that you're also able to help us to get on board. Did you get a good reception on this opportunity?
Yes, indeed. I think EV and two-wheeler and four-wheelers, hopefully by next year we can produce it. I think because we have enough nickel with downstreaming, and we have also clean energy, and we have nearly everything, the material that we need for the EV. So there are several Chinese companies jointly with us, like Wuling, and also soon, we don't know, soon I think with the new regulation that we just announced, like BYD and others, and Hyundai, also LG. So there are several car manufacturing already, invested in Indonesia. So then we can export some of these to South Africa. I think within 2025 or 2026, I think we have much more enough production of the motorcycle. I would like also to inform you, the population of Indonesia is 282 million. They're not a small country. And the middle class is like 70 to 75 million. So Indonesia can produce by 2025 and 26 at 2025 is like 150,000 vehicle. So we can go up. So depend on the demand. So if we can link with South Africa, Indonesia also could export four-wheeler to South Africa. beside two-wheelers. Two-wheelers, I think this year or next year early, we can also produce quite much on the two-wheelers.
On the back of the International Monetary Fund's upwardly revised global growth projections, CNBC Africa's Tanya Habimana spoke to Diamond Lay, head of World Economic Studies at the IMF's Research Department, about their view on sub-Saharan Africa.
Of global growth, growing at 5.2%, this is lifting demand for exports of all kinds of inputs into what they produce in China, including oil, copper, metals, right? And because the risk is that China's recovery could underperform, that risk is coming from the real estate sector and investment more generally, which is very import heavy. So that would produce a downside effect on commodity prices around various commodities. And for Africa's economies that are, just needing to grow faster, this would compound problems because, as you know, also there's a big issue of debt sustainability. So lower growth makes it even more risky for a number of countries, lower income countries in Africa, to have the burden of debt.
And how are you looking at the inflation picture globally? Because that's the other headline that has been dominating the markets and the economic news. How are you looking at that?
So global inflation is definitely coming down this year. And a lot of that is coming from food and energy prices. We've got inflation coming down from 8.7 to 6.8 in our forecast for this year. That's nearly a 2 percentage point fall, and about 3/4 of economies in the world should see that. But when you strip out food and energy, it's much more gradual decline. And if you look at advanced economies, there's basically the same forecast this year as last year on average. So very slow, much slower progress on core inflation. Inflation is still above target in 96% of economies with an inflation target. So the risk is that if inflation progress slows, we'll see the need for more interest rate hikes, and that could have implications for growth and currency movements.
And so, given all of this, what are some of the policy recommendations that have been made for sub-Saharan Africa in particular?
Well, for sub-Saharan Africa, making sure that inflation comes down towards the target. On average, sub-Saharan Africa still has double-digit inflation, so the need to keep monetary policy staying the course. A lot of the central banks have already increased interest rates, but to keep on the case until it's clear that inflation has durably come down. But this is a downside for growth. So the need to support people, support families, and make space for that by generating more revenue and doing reforms that can actually make it easier to do business, because that is ultimately what's going to raise longer term prosperity.
And with one thing that I did note in your report was the repricing of financial markets. What is meant by this, and how do you view that?
Yeah, well, this relates to the fact that a lot of financial investors do not think that the central banks are going to have their rates at the levels that they've announced. For example, in the case of the Federal Reserve, our expectation based on the policies that they've announced is that interest rates will go up to about 5.6%.
And that's all from my side. It's back to you.
Thanks for the update there, Palesa. Up next, we have Sarah on standby for more content from East Africa.
Well, thank you. More women have joined the highest levels of financial services industry leadership across regions. This is also the case for Rwanda. However, continentally and globally, progress has been relatively slow. In our conversation with Nuru Mugambi, founder and chair of Angaza Forum, she shares what could be done for Africa to achieve inclusive economic growth.
Perceptions of what finance is and looks like, and what success looks like within the financial sector. The financial sector, as you know, dates back 1,000 years, and over time it's evolved. in response to dynamics in the economy and obviously changing lifestyles. But by and large, the economy is still very much, the financial sector still very much is designed mainly with men in mind. So we at the Angaza Forum, we seek out to reframe what finance looks like, to challenge what the picture of success looks like in the sector, because finance plays a very critical role in our economy. It serves as an intermediary for channeling resources to where it's needed most, thereby really serving as a catalyst for economic growth and development. And we ask the question, where is the role of women within that, right? So we seek to identify and support ascendant women within various financial industries so that they can really enhance their individual influence and help shape the financial landscape. And actually, we've already seen how by supporting women in the financial sector, it can create a catalytic effect. We have awardees from the Angaza Awards who have been emboldened to champion initiatives for women SMEs, and others have even challenged the status quo within their financial institutions by asking for transparency when it comes to remuneration so they can see that gender pay gap within their financial institutions. So really, that's really what we're looking at. We're looking to reframe finance by asking, where are those women who are creating an impact in the sector, and how can we better support them so we can get better socio-economic outcomes from the sector?
Over the years, a lot of effort has been put in place towards bridging the gender gap within the finance sector. Overall, substantial progress has been made, but still we're not where we want to be. What are some of the key challenges, and what are some of the perceptions that we need to unlearn?
Yeah, so I think overall we have seen some improvement in terms of that gender gap in several countries, especially across Africa, primarily because of the advent of mobile banking and digitization. So definitely we have seen countries like Kenya have a really marked improvement in narrowing that gender gap to really within a 10% gap. But other countries, you have significant gaps as much as 50%, 70% gap when it comes to access to banking products, for example. So some of the challenges that cause these gaps, we have the cultural challenges. Of course, we have those cultural stereotypes. And like I mentioned before, as much as finance has been around for thousands of years and has evolved over time, by and large, the sector is still designed with men in mind. So therefore, you have that intersection when you have policies that require collateral, and most often the preferred collateral is land, for example, and you have culturally, sometimes women were not enabled to own land, so therefore they're not able to access financial products, credit products from financial institutions, and some of those historical cultural practices are still being seen in the sector today, and that's causing the gap. There are other policy-related issues that are creating the gap. For example, from a fiscal perspective, we know that women are primarily in the agricultural sector and informal trade. So therefore, we really need to look at our policy design to see how we're allocating our national budget towards those sectors where we know there's a critical mass of women actually contributing to.
According to the National Institute of Statistics, Rwanda, agriculture contributes about 27% of Rwanda's GDP, equivalent to about $3.5 billion. Dairy is estimated to contribute about 37% in agricultural sector. We spoke to Jonathan Kinisu, the managing director of Tetra Pak, on bridging the packaging gap in the value chain.
Pak has worked with Inyanje for the last 14 years. We are what we call a food processing and packaging solutions provider. So we sell solutions basically to beverage companies that do dairy, that do juice, and many other products. So we started work with Inyanje in 2009. We sold them what we call ultra heat treated technology, or aseptic packaging technology. And that is what they use to package the milk that you see that is long life, as well as the juice products that they have. So yeah, we've been here for 14 years in Rwanda, and yeah, looking forward to many, many more opportunities going forward.
Yeah, when you talk about packaging, I
Yes.
think that's an area that has a lot of opportunity and a lot of potential, especially in the African continent, since the manufacturing sector is at one of the key enablers for economic growth. Just do talk to us about just looking at some of the investments that have been put in place in fast-tracking.
Packaging is huge, and if you look at the context of Tetra Pak, we're based out of East Africa. We service 13 countries out of East Africa, out of Nairobi. We're looking at about 50 customers or clients within the region. If you look at the amount of investment that's been put into packaging within this space by clients, is well over $500 million. And you can imagine the knock-on effect of the economy, but more importantly, what this means in terms of the agriculture value chain, because here we're supporting farmers. If it's dairy, you're working with farmers to ensure that you have good quality products. You're working with people who produce fruits, converting that into pulp, and not just from the farmer level, from a value chain perspective. Now we're looking at creating employment in manufacturing. You're also looking at the distributors. Further down in the value chain going into the market. So it's a whole ecosystem, and all the investment along the entire value chain is really what contributes to the sector. If you look at it from Tetra Pak's perspective, Tetra Pak has been in Kenya for the past 67 years. We have a factory that does conversion. So we bring in raw materials of paperboard, polyethylene, we print our customers' designs, and we've had that factory there for more than 40 years. And this is the factory that services our customers throughout the East Africa region. Big investment. We're just completing another round of investment in that factory to expand it. Plenty to discuss.
Yeah, I mean, we live in a time where everything is around being climate cautious.
Yes.
Even when you look at packaging, everything is transforming.
Yes.
So how is innovation being leveraged and being used at this time?
Yeah, I think the Tetra Pak package really embodies sustainability. And because you have to look at it from it's very fundamental. Its essence. It's a carton beverage package, so it's more than 70% paper-based, and then it has a little aluminium foil and some plastic, just to protect various layers on the customer's design and the product. So by its very nature, it's a sustainable, climate-friendly package. In terms of its recyclability, it's 100% recyclable. And we work with recyclers in different markets around the world. We have 2 recyclers in Kenya. So the package itself, is designed to be climate smart. What is Tetra Pak doing? Because we recognize that times are changing. We have to be more responsible to the environment. We have to deliver better packaging solutions. So Tetra Pak as an entity invests a lot in terms of research and development.
And that's all from East Africa this week. Thank you.
Thanks, Sarah. It's time to bring you highlights from West Africa as we stay with developments from Niger. Now, Nigeria has cut electricity supply to Niger, firming up the sanctions imposed on the country by ECOWAS for ousting President Mohamed Bazoum from power. The junta led by Abdurrahmani Tiani has rejected the sanctions and says it will not bow to pressure to reinstate the ousted president. Jimmy Adume, High Representative from Coalition for the Sahel, shares some insight on the dynamics at play.
Is important, but we're also conscious that with the right kind of investment, there is a huge mutually beneficial relationship, partnership that we can develop between the UK and African economies. And when I say the right kind of investment, you're absolutely right that through much of Africa's history, its agricultural products and the products from its mining industries have been exported in a very raw form. It's been processed overseas, and much of the profitability has been added outside the continent of Africa, which then has to re-import basically its own product at a much higher price. So the UK would very much like to see, I would very much like to see more processing capacity in Africa. Ultimately, it's not for the UK government to dictate to our to the BII the nature of their investments, but certainly we recognise that it's in Africa's interest and indeed the UK's interest for more of that value add processing to happen within the continent, generating revenues that can be spent for further economic growth within the continent. That's good for Africa. Economic prosperity is good for both of us. And of course, that economic prosperity often goes hand in hand with stability, as we discussed earlier, and that's good for everybody. So that's very much the kind of investment that we're looking to see, and a shift in the nature of investment in the future compared with the kind of investment that we have perhaps historically.
Up next, the UK Secretary of State for Foreign, Commonwealth and Development Affairs, James Cleverly, has announced a £10 million UK-backed facility for Nigeria, which aims to unlock funding for climate-friendly infrastructure projects. The Foreign Secretary says the UK government hopes to see this and other fundings have a direct impact on local production and value addition in Africa. Take a listen.
This opportunity, I stand behind what ECOWAS has publicly stated, and initially when they met in Abuja, the first reaction was that, well, military coups are things of the past and they must not be tolerated. But then progressively, as we moved forward, I saw some very encouraging signs. That is, they identified the former president Abu Bakr Abdul Salami and then the Sultan of Sokoto, and those two respected gentlemen went to Niger, to Niamey, and tried to discuss with the junta and all the political parties a way out of this crisis, which is very unfortunate.
Now, do you think that talks will be a little more difficult at this time, since we're now seeing sanctions being put, regional sanctions already taking shape? Of course, an example is Nigeria cutting power supplies to Niger.
Yeah, it's a very difficult situation and a sad situation as well, because Nigeria is put in a very difficult situation by itself, because it's heading the ECOWAS the presidency, and I guess they must show something to determine the extent to which others might follow. So cutting electricity is very unfortunate. The Nigerian cities and people are really suffering from the cutting of the electricity. But I think, as the saying goes, you negotiate from tough positions, from strength. So hopefully this will certainly subside and not continue further down the road.
Now, although the coup has been widely condemned by Western powers, Niger is an important Western ally in the fight against groups like Al-Qaeda and ISIS in the Sahel region. And I know that at this time, I suppose Western countries would be working, if you will, a fine line, trying to balance, keeping that relationship and also ensuring that democracy doesn't perish, as it were, in that country. What are your thoughts on that?
Well, excuse me, my thought are that they all lined up behind ECOWAS. So people are watching ECOWAS very carefully. There are a lot of dynamics at play, and certainly we need to deploy all the resources available to with the politicians, military, sort of political parties, the people, all together coming to the table and determine the extent to which we can get out of this crisis, because it's to nobody's advantage to get Niger into this situation and keep it as long as it can last. That's not a good thing. So the Western powers are certainly behind ECOWAS. ECOWAS certainly undertook very good steps in terms of sending negotiators, and then we're just crossing fingers that within the next couple of days or 3 days, they will come to a reasonable outcome, a reasonable results that will lead us to certainly what you just said in terms of organizing something so that can get Niger back onto the road to democracy.
Now, another part of this story is the obvious threat against democracy in the western part of the continent. We've seen, obviously, so far 7 since 2020 between Western and Central Africa. And ECOWAS has said, look, now will be the time, now is the perfect time to stem this. But in your opinion, what needs to happen now to ensure that we do not see the region sliding back into absolute military control?
Well, the root causes of these coup and counter coups are certainly poverty, human rights abuses, and lack of good governance. So I think as you know, the neighboring countries have all undergone initially democratic elections, presidents were elected, but then progressively the situation deteriorated to such an extent that the military found it to be important to sort of come and kick out those democratically elected individuals. And that basically has a domino effect. And you have Mali, Burkina Faso, and now Niger and Guinea from the other side. So what we need to do is really look at the root causes with respect to bad governance, poverty. As you know, Africa is about 65% young people, populated by young people, and then under the age of 25. And those people really need some hope instead of constantly looking for ways and other opportunities to go either to Europe, fall and die in the sea, or go and join the rebel forces or the terrorists. So basically, the root causes are known. It's about time that we certainly all of us together get around the table and then identify key measures that will be implemented to move us further away from coup and counter coup, but to solidly democratic institutions.
Now we have less than 2 minutes left. The ECOWAS has given the military junta in Niger up until Sunday to reinstate President Bazoum. A threat that the junta has said it will not concede to. So what kind of outcome, in your opinion, do you think we should expect? Although ECOWAS has said force will be the last resort, but how, if they do resort to that, how destabilizing could that be for the region?
Well, it will have a very devastating consequences in the region. As you heard, neighboring countries said that if ECOWAS should get militarily into Niger, others will join, and that will create some serious havoc into the region. So we don't want that to happen. So we certainly were hopeful that with all the strings pulled from behind the scenes, they will come to a reasonable undertaking. The civil society in Niger, political parties need to step up to the plate. All the regional powers need to really come to their senses and help us navigate through this to avoid certainly the chaos, the like of which you have not seen in this region. So it's not a good thing. We're hopeful that certainly with everything that's been done and said behind the scenes, I think we'll come to a very fruitful discussion and good results out of this.
And on that note, it's a wrap on this week's show. Thanks to Palesa and Sarah for the regional updates there. Do catch us same time next week for more exciting conversations. I'm Akin Obake. Do enjoy your weekend.